from a commercial point of view, possibly a little tough for Star, because as we know, in the last 4-5 years, it is
Hello and welcome. You're watching Business Today TV. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing the most in trade. We'll also get you expert views as to how should you be approaching the equities as an asset class right now. But first up, a quick check on how the markets are doing as we end the day in today's trading action. Now let's look at how the Nifty and the Sensex are trading at. Slipped into the red now with 18,518 looking on the Nifty, about 15 points of a decline, 0.09% of a fall for that one. The Sensex also slipped about 75 odd points lower in trade, where the Sensex is now drifting lower at 62,540 odd levels, about 0.1% of a decline for this one as well. Let's look at the broader markets. They've also seen some cool off from the day's high level, especially the mid caps that are up now only about 0.25% odd. The small caps continue to hover over 1% uptick, so definitely outperforming the other benchmark indices. Let's look at the sectoral indices and see how the Nifty Bank performing. It's in fact drifted to the day's low, and that is what is exactly creating pressure on the benchmark indices, with half a percentage point decline on the Nifty Bank. We've also seen some cuts coming in on the FMCG pack. Now it's turned flat with just a positive bias in today's trading action. We were looking at how the realty pack, the IT pack and the auto spaces were up in trade today. Slight losses for those indices as well, with the IT just about half odd percent of an increase in today's trading action. Let's look at the auto and the realty pack as well. So the auto space is also up by half odd percent, still holding up its ground as we see the continuously the numbers coming out for the May month as well as far as the sales are concerned. Realty pack continues to hold its ground, 1.2% uptick for this one as well. Let's look at how the metals are doing at this point, and the oil and gas, the energy stocks as well. The healthcare space, by the way, has actually inched up higher, 1% up for this one. The metals have turned flat with a negative bias. Let's look at oil and gas as well. With crude oil slipping in trade and hovering near the $70 a barrel mark. The oil and gas space is just about 0.08% lower in trade. Let's also look at the top gainers and the losers to understand which are the sectors that are producing the maximum gainers and the losers at this point on the Nifty index. As far as the gainers are concerned, Apollo Hospitals continues to be on the top with 3.8% of an uptick. Divis Laboratories follows with Tata Motors, Bajaj Auto, Hero Moto, Eicher Motors. These are the kind of stocks that are doing well in trade. And Asian Paints also up by 1.5%. On the other side, when we also now Sun Pharma has also inched up higher, 1.2% uptick for this one, and the Cipla stock has also turned positive now. Let's look at the laggards to see where is the pressure really coming in from. Coal India continues to hover 4.4% down amidst the OFS. Day one has already seen fully subscribed portion of the non-retail division as far as the OFS is concerned. Kotak Mahindra Bank, Bharti Airtel, some of the other laggards at this point. But time to welcome our guest on the show. We have G. Chokalingam joining us, the founder of Economics Research. Mr. Chokalingam, welcome to the show and thank you so much for taking the time out for this discussion. Well, we've been looking at the markets inching higher in the last few trading sessions as well. We've seen levels like 18,500, 18,600 now, and some of the other factors like the macros also supporting the earnings. We've already seen largely in line with the numbers as well. What is your sense of how are the markets placed from here on?
Yes, market, I firmly believe that in the short term, the optimism would continue at least till November end. A, the GDP growth has come above expectation. B, lot of macroeconomic factors are very, very conducive. This morning we saw the banking credit growth is around 16% in April as per the RBI report, which is a 10-year record high. So the credit growth is a 10-year record high, the quality of asset is a 10-year record high. Then you have a very robust remittances coming to India. Then the freight handled by port and the railways are robust. Like this, there are so many factors. Food grain productions are going to be record high for 4th or 5th year in a row. So then we saw capex cycle being very robust from the government, and then even the fiscal deficit target is being met for FY23. So the long list goes on. On the other hand, I firmly believe that in India at least, we are almost done with the rate hike. The inflation rates of both the WPI and the retail inflation rates have come down. So the only risk in the short term is monsoon. In case monsoon fails miserably, it will not impact the GDP growth, but it can alter the sentiment through inflation, and it can lead to further rate hike. So otherwise, I believe the optimism we are seeing now will continue till November. Why I fixed November is that after that you have an election in Madhya Pradesh. So by any chance the ruling party misses Madhya Pradesh like Karnataka, then the sentimental impact could be there. So therefore I would suggest stay invested, and one can have even tilt towards small and mid caps,
Yeah.
because that is a segment which is likely to outperform the large cap sector in the short term.
Okay, I was actually coming to understand that is India really entering a Goldilocks kind of a scenario with firming up GDP numbers, cooling off inflation at this point, and India retaining the fastest major growing economy tag for the second year in a row. What does that really mean for D Street investors, if you could break it down for us?
Certainly. I mean, as you also listed out the factors, it looks really amazing. The politically also, I'm saying in terms of global politics, India has powered a destination for FDI. We have already seen Amazon, Apple now. Even Tesla says it will definitely set up the plant. And then, the certain factors like service exports. It's amazing. It's a 10 record high service export is happening in the country. So it looks like, and not only that, you look at the entry of retail investors. The BSE took 145 years to get nearly 4 crore figure investor base. But in the last 4 years, nearly 9 crore investors are added. Every week, 4 to 5 lakh investors are coming. So what it means for retail investor is that unless there is a war in Taiwan or there is a miserable failure of monsoon, the both short to long term story look very good. Yes,
Okay.
the Lok Sabha election could create some problem in the short term, but otherwise, I want to tell you that in the last 30 years, or ever since the FIs were allowed in the country, they always worried about the democracy. They are not much concerned about political instability. So
Okay.
there will be a sentimental impact in May 24 if at all there is any adverse development on politics, but that will be an opportunity because the global investors like India's democracy, and therefore both short-term and long-term outlook, according to me, look very good. The only risk factor is possible any war in Taiwan or any other region within Asia.
Okay, so what kind of realistic return expectations one must have from the benchmark indices? We are very close to the life high levels. We're just about 200 to 400 levels away from on the Nifty level. Do you see that happening soon? And for the entire year, what would be a realistic expectation you would have on the returns?
See, another 5 to 7% return is very much possible till November of this year or December end of this year.
Okay.
And if investors are not, impacted by any political adverse development in terms of confused election scenario is not anticipated, then I would tell you that FY25, I mean FY24, the index can rise about 7 to 10% because of the uncertainty of election. But otherwise, once election is over, what we saw post 2014 is likely to get repeated in 2024. There was post-election in 2014, there was a vertical jump in the valuation of Indian market, Indian small caps, mid caps, large cap across the board. Similar is possible because, as you said, India is going to be the fastest growing economy, and politically, in terms of global scenario, also is well positioned, and even 6.5 to 7% growth will be the fastest in the world. And I mean, I already listed out the macro parameters. There are many more macro parameters which are giving a lot of confidence on the medium term, long term story of India.
Right. So what is the ideal way investors should be now approaching their equities, considering there are so many macro factors that are supportive, barring one or two major negative triggers, if at all they happen. Of course, those are overhangs. But for a risk-taking investor, if one really needs to or wants to really lap onto the kind of opportunities that exist for the D Street investors, how should one construct a portfolio?
Certainly. I mean, I appreciate that, whenever you interview me, you focus on this. Please continue asking not only me, other experienced people, because it is very sad story in India that, in my experience, at least 7 to 8 out of 10 retail investors really don't make money. Even if Sensex doubles or market cap triples in 10 years, they don't make money.
Yeah.
So therefore, what is very important for retail investors is A, don't borrow and invest in equity. B, if you are borrowing, first reduce your borrowing, then only come to equity. Third, don't put 100% of your stocks in the small caps or mid caps. Always have, as a part of equity research strategy, have 30% minimum in the Sensex and Nifty stock. If you are very conservative, up to 50% in the Sensex and Nifty stock. They don't guarantee capital protection or wealth creation, but at least easy to exit and they don't crash like a small cap. Very rarely any index stock crashes. So whereas 30-40% of small and mid cap stock can crash at any point in time without giving you any exit route. And then coming to stock selection, after having put 30 to 50% in the index stocks, a balance, 50 to 70% based on your risk appetite, put them in small and mid cap. There also, you have above 1,000 crore to even 30-40,000 crore range of mid caps. So don't focus all on tiny small cap or small caps less than 1,000 crore. So you spread it from anywhere 1,000 crore to 40,000 crore. Roughly 1,000 crore is the upper limit of the mid caps, large mid caps. So you spread it across the whole range like a continuum. After fix this research strategy, then you come to individual stock. 4 or 5 parameters you never compromise. One, don't allocate more than 5 to 8% of your equity per stock, and second, don't ignore the management quality, the listing experience. If any stock is listed in the market for more than 10 years, it is better. And then the balance sheet quality in terms of the leveraging, debt equity ratio, debt to sales ratio. If debt is more than annual sales, better be very cautious. Then look at working capital management, look at receivable and inventory. If that is as a percentage of sales is more than 1/3 of the sales, be extremely cautious. And then don't compromise on the valuation comfort. Don't go for a 3-year dream, 5-year dream, and you see next year itself whether the P ratio can contract to earning growth. So these are the things you do. I can assure you that majority of the retail investors can create a lot of wealth, but on the contrary, many people opt for the pledging of shares, intraday trading. But I have not seen anybody making wealth in the retail segment doing intraday trading. So these are the few learnings if they follow. This is a beautiful market. One can have a comfortable life with a lot of disciplined investment, strategy.
That's wonderful. I truly appreciate Mr. Chokalingam for helping all our viewers really understand it and simplifying it for them. What exactly are the metrics in which they can decide which are the stocks that they should be looking at for their portfolios as well. You mentioned the macros that will be important for the markets to really track going forward from here as well. You talked about mid cap and small caps which could be outperforming going forward from here. If I had to ask you some themes that you believe that now would be outperforming the markets as well, which are those current themes that you are keeping on your radar?
Yeah, so I have a bias for one stock called Nesco, and we also personally invested, my family, my company. But I believe in the stock, therefore I keep repeating it. I believe that this is the stock for the next generation.
Okay.
It's a Mumbai-based company. It has got a 65 to 70 acres of land in Goregaon on Western Highway and well connected by metro. And if you look at the last 10 years, it has built capex phenomenally. It has increased 3.5 times the capital expenditure. At the same time, increased the cash also more than 3 times. It's sitting on nearly 1,100 crore of free cash. It's engaged in corporate park, and engaged in the exhibition now, getting into food business also. So I believe that in Mumbai with this kind of land bank and with this business model, this is a stock for long term to create a wealth, because the business model is directly beneficiary of inflation. As inflation keep rising, their rental income rise, and it is located in Mumbai. That is where you have plenty of opportunities for the corporate sector to set up the offices. A lot of rich people are in Mumbai city as compared to other cities. And most importantly, the landscape is V-shaped in Mumbai. You have a water free sites. So a lot of people are, crunched within this V-shaped landmass, which is very narrow, which means there is going to be a lot of demand for such, land bank.
Okay.
So excellent management, the way they manage their balance sheet for the last 10, 15 years, I've been observing. So this is one stock. And other stock is, Tata Power.
Okay.
These are very good long-term shares. It's getting into renewable energy from almost 100% thermal power. They are slowly reducing the dependence on thermal power, getting into solar and wind energy. I believe Tata Power for next 1 to 3 years is going to be a phenomenal stock. And the third stock I can present is Sundaram Clayton, part of TVS Group. It's a holding company of TVS Motor. On its own, also it has got auto component business. The promoters are excellent. They rewarded the shareholders with a phenomenal, the bonus debentures of 1,060 rupees per share of Sundaram Clayton. The promoters do not have a direct stake in TVS Motor. Only Sundaram Clayton has about 50.5% stake in TVS Motor. So the promoters of both TVS and Sundaram Clayton to benefit themselves or also to benefit the public shareholders. There is only one way: unlock money through Sundaram Clayton, unlock the value in TVS Motor through Sundaram Clayton,
Okay.
and then reward, Sundaram Clayton shareholders. So that's what they have done last year, and I believe, my personal view, this kind of reward to the investors will continue in future also, and it is a huge discount to market value of TVS Motor, the Sundaram Clayton's holding. So this is the one stock I believe for next 1 to 3 years is a very dependable quality stock. So these are the three stocks. Among these three stocks, we only hold Nesco.
All right, so Nesco, Tata Power and Sundaram Clayton, three stocks that you can definitely look at from 1 to 3 years perspective, and quality stocks that you can add to your portfolio, which may actually give you handsome returns going forward from here. Many thanks, Mr. Chokalingam, for being with us on the show and discussing with us all the insights about the markets and sharing with all our viewers the top picks of your recommendations also for all our viewers as well. Right now, if we look at the markets, they're actually drifting lower. So let's take a look at how the markets are performing at this point. In fact, we've seen sudden sharp cuts coming in on the Sensex, 240 points of a decline, 62,380, and the Nifty is also drifted lower, about 65 odd points right there. It slipped below the 18,500 mark as well. The mid caps have absolutely turned flat, with small caps still hovering 1% higher, but definitely we are seeing this pressure getting built on. Let's look at the Nifty Bank also. I think that's where exactly the pressure is building up from as far as the markets are concerned. The Nifty Bank definitely inching towards the lowest point of the day, about 0.9% of a decline. So that's exactly where the pressure is really coming out from. So 0.1% decline coming in from Nifty Bank. That's the index that's weighing on the market sentiments, and that's why you've seen this sudden sharp fall over the last 10 minutes in the markets as well. Looks like we are going to be ending the session in the red zone, 10 minutes away from the closing of the day, but we'll keep an eye on the markets and everything that moves the D Street and the sentiments so that you can also track what exactly is impacting your investments in equities as well. Do stay tuned on with us on Business Today TV. Don't forget to subscribe to this channel and continue to engage with us on our other social media platforms as well. Until then, thanks for tuning in.